Siena Golan. You are property market research analyst at DWS. Thank you for joining us on BiTV.
Pleasure.
DWS held a webinar yesterday where you analyzed the implications of the recent elections in France for the real estate investment markets in general. What are maybe to start the main takeaways from these French elections from an investor perspective, do you think?
So we should keep in mind that at present, it's not clear who's going to lead the government and under what conditions. But we should also bear in mind that from an occupier perspective, we were coming into these elections from a strong position. Vacancy is generally low. Development starts were also quite suppressed. And occupier demand was holding up well. So these are good conditions to create rental growth. And so we maintain our positive call on the main sectors that we are interested in at the moment, those being logistics and student housing. But I think from another perspective, the investment market is not likely to respond well to the uncertainty that's been created by these elections. Uncertainty generally means a pause in investment activity, and that might mean less investment in certain sectors which are more dependent on cross-border investment activity, such as La Défense. The logistics market, again, was popular with international investors. So the good news is that for those who see opportunity in the logistics market, it might be possible to secure high-quality assets in a less competitive bidding process.
Because yes, you mentioned uncertainty, which was prevalent over the last 2 years with the numerous rate hikes from the ECB. I want to quote an article published this week by DWS's CIO Bjorn Jesch, which labels the French election a noisy non-event, but also states that some uncertainty will persist until a government emerges. As you mentioned, investors don't like uncertainty usually. How does this affect their perspective on the French market, maybe compared to other markets in Europe?
So as you mentioned, uncertainty is nothing new in recent years. We've had the pandemic. We're still going through a crisis with the Ukraine. So it's nothing new, but what it does tend to mean, as I said before, is a moderation in investment activity, particularly from international sources. And I think that certain popular investment strategies like value add, which have seen a lot of capital coming from the US, we might see a deceleration in the activity that's happening in this sector. We've already talked about logistics, but this was a sector which was starting to see some green shoots in the recovery. Investment volumes in Q1 were up on the year, and we also saw some high-profile portfolio transactions like the Podium portfolio earlier this year. So these two strategies, we might see a slight moderation in investment activity. That being said, real estate markets tend to be a bit slower to react to these kinds of events than, say, equities, and that can be an advantage in that it gives a bit of time for the situation to become more clear and for us to get a view on what the broader political support for business and investors might be. So we'll have to wait and see if the current period develops into either a longer term period of instability or we see some more clarity.
Yeah, because you mentioned, yes, recovery in over the last 2 years, at least 18 months, we have seen investment volumes fall dramatically in France as in Europe. And when the first rate cut interfered earlier at the end of spring, people were hoping that it was a call for recovery, that it was heralding a new recovery for the real estate market. This election is that, if I understand you correctly, it could postpone this recovery for the French real estate market.
it depends which sector you look at. Generally, uncertainty in terms of politics is most negative in terms of the outlook for international investors. But there are many sectors in France which are quite dependent on domestic investment. For example, the residential market is a good example. Some student housing as well, even though that's popular with international investors, we still see that domestic players are dominant. So if you contrast those with certain sectors like logistics, like La Défense, which I've already mentioned, there is different levels of resilience depending on where you look to the outcome of the political situation. That being said, real estate markets don't tend to be responsive in the same way as, say, equities or bonds. So I think we'll have to wait and see if there is more clarity on the political situation to see some kind of measurable effect on real estate market performance.
Thank you very much, Siena Golan, for this very valuable insight. I know that in this uncertain time, our readers need it more than ever. In the meantime, thank you all also for being with us, and we'll see you soon on BiTV.